students, their parents,
Hey, welcome,
or my
Facebook.
teachers. The biblical foundation I received from CBS is the driving force behind all of my decision making and communication. And to God be the glory.
The College of Biblical Studies is regionally accredited and currently accepting applications for the fall semester. Apply online at cbshouston.edu or call us at 713-77-BIBLE.
Have you written a book and want to get it published? Christian Faith Publishing helps thousands of authors publish their books with a company dedicated to strong Christian values.
The most important qualities that I was looking for was a publisher who was honest and upfront, no hidden costs or fees, and owning the rights to my own work.
It all starts with our free author submission kit. Call 800-566-1012. We'll edit, design, copyright protect, print, and distribute books online and in bookstores everywhere. You'll see your books in Christian bookstores, Amazon,
All right, guys, we got
iTunes,
45
Barnes &
seconds.
Noble, and many others. If you have a biography, novel, devotional, self-help, or other inspirational work, we
You guys
get
hear
it
me?
published.
Yes.
We provide
Okay.
professional book editing, award-winning design, with the highest royalty structure in the industry. Plus, you retain 100% rights to your work. Get your book published today. Call for your free
We have less than
author
90
submission
seconds.
kit at 800-566-1012. That's 800-566-1012. 800-566-1012.
The following program, paid for by Right Path Real Estate, does not necessarily represent the views or opinions of the staff, management, or ownership.
But
of
it
the
should.
station. It's time to get on the right path with Right Path Real Estate Radio with Tom Perry and Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today.
What? Huh?
Get ready.
Oh, yeah. That's fine.
Volunteers behind you are on the air now. They're taking calls at
Yeah.
713-785-1817.
It's fine.
Toll free 877-881-0271.
Oh, we're like Twinkies
You guys
today.
ready?
Yeah.
All right, stand by. Here we go. Hot mics.
Hey, welcome to the show. Right Path Real Estate Radio, 713-785-1817. Jason and I are Twinkies today.
We're in the same shirt. I bet they're even the same size.
Yeah. You could probably, I'm sure the people watching right now on Facebook, they're like, which one is Jason and which one is Tom?
They're like
there's
twins over here.
I know, right?
Twinsies.
Twinsies. They both have headsets on. They both have the same shirt on. It's like, wow, which one is which? Anyhow, welcome to the show. So why real estate?
Why real estate? I don't know. I don't know if you should do real estate.
Yeah.
Maybe you should keep doing what you're doing because that'll make you successful, right?
Yeah, I'm reading a book right now talking about time buckets, right? You've got a work time bucket and you've got a leisure time bucket. The more time you turn into work, right? The less time you have for leisure. And most people, have this idea that the more you put into the work bucket, eventually you make enough to where you can pour some of that money into the leisure bucket, right? That time into leisure bucket. But most people don't really go in with a plan or a strategy.
No.
And so because of that, they wake up in the future, their future self, and they're like, man, how did I end up here?
Yeah, how did I get where I'm at? How many of you, this is one I always find fascinating, when somebody says, I don't really use my college degree.
Yeah, right.
And I'm like, well, whose fault is that?
Right.
It was poor planning on your part, right?
Sure, right.
So I always wonder.
I feel like I use my college degree. I have a BS in psychology, which, use a lot in sales. Although, truth be told, if you understand psychology, it's really about the statistics. However, but man, I certainly didn't use all the college courses. I mean, I don't use organic chemistry at all.
No.
I mean, that's, thank God.
Yeah.
Yeah.
Yeah. Well, that's specific to that discipline, right?
Right,
But
sure.
when you look at how many people end up in a place simply because they fail to plan.
Sure.
Well, I was watching a lot of comedians in cars drinking coffee with Jerry Seinfeld. And Seinfeld is talking to Jim Flanagan, who's another one of these clean comics, very famous guy.
Sure.
And Jim says, I'm a bag guy. Like, I've always got my bag with me because
Yeah.
I'm always planning out my material.
Sure.
And he said, I don't know how these guys improvise. Like, how do they just wing it? And you know what? Jerry said, Yeah, those are the same guys that wing it are going to be broke in 20 years.
course,
I mean, he
right.
just said, I mean, here's a guy who's worth almost $1 billion making people laugh. And he tells you got to be prepared.
Yes.
You got to have a plan.
Right.
And if you don't have a plan walking in, and what's amazing is they broke it down. Here are these guys that are supposed to be funny, right?
Right.
And they broke it down like, this is what I need to be doing every day to get where I want to go.
Yes.
Because at some point, now Jerry still travels and
Does
works
stand up,
3 weeks a month, right?
Yeah.
I mean, he's still like doing his thing, right? But it's fun for him.
Sure,
right?
right,
He's
yeah.
having fun.
Right.
He's not doing it for the mortgage anymore.
Right.
He is just fine.
Yeah,
Right.
absolutely.
But you can't get there without a plan. And I see so many people like, well, why should I do real estate? And then a great question is, well, what are you doing now? Well, I don't know. I'm kind of invested in my company's 401k. And I'll say, great. What are your annual expenses? Now, that's always fascinating.
Yeah, right.
Because a lot of people don't know.
Sure.
Let's say it's $100,000. Great. You need $2.5 million to retire. How close are you to
And they're
that
like,
goal?
what?
Where'd you come up with that number?
Right.
How did you know?
Yeah, right. You just like pop that off. How'd you know my
Yeah.
number? I don't even know my number. How do you know?
How do you know my number?
Right.
Right.
Sure.
And so that's the question. It's like take your expenses, multiply by 25, and then that's our baseline. That's where
Sure.
we need to get to, right?
Right.
We need to get to $2.5 million if we spend $100,000 a year. So now the question is, where are you at now? Oh, I've only got $500,000 and I need to retire in 15 years. Yeah, I can tell you right now, you ain't gonna make it.
Right.
If you're doing what you're doing now.
Yeah, you're behind the curve, right?
You're way behind.
Yeah.
Way behind. So the only way to do that is through, at least we found, that has the amount of return that makes sense to be able to meet your retirement goals is in real estate. That's 8 out of 10 millionaires doing real estate. So if you want to try it a different way, you can, but you got a 20% chance you're going to make it.
Right.
Or you can switch over to an 80% chance to make it and get into real estate. So
Yeah, play the odds.
play the odds, right?
Right.
So that's my why real estate. Just model a system that works.
Yes.
This is what works. Follow the system.
Yeah.
It's
What's
that
the,
simple.
why does it work?
Why does it work? Well,
Yeah.
it works so well because you've got essentially five different ways you make money in real estate, right?
Yes.
We really focus on two of the biggest ones, which are appreciation and cash flow.
Correct.
But really, when you break it all down, it's the appreciation that creates
That's
wealth.
the biggest side.
It is the biggest part. It's the biggest upside. There's a commercial running on one of the big radio stations right now for a property management company telling people, do not sell your house that you live in.
Right.
When you move, rent that house out.
Correct.
And one of the things they said is in Houston, over the last 10 years, we've averaged 10% a year appreciation. You can imagine a $150,000 house. It's appreciating in that first 12 months, $15,000.
Yeah.
And you're out of pocket. Let's say you put 20% down. Old school, nothing like
Nothing sexy.
Let's
No
not
creative
talk about
financing.
like creative
right.
finance.
No,
Let's
right.
talk about the
no
cool
subject
stuff.
to, no nothing.
Nothing
right,
wild, right?
Mhm.
You put $30,000 into that deal. The first year, just in appreciation, it makes $15,000. That's a 50% rate of return.
That's
That's
crazy.
how you get rich in real estate. You're not getting 50% rates of return buying Amazon and Netflix and Bitcoin and all that other nonsense. For
Not
the
from
next
where
10
it is
years.
today. I mean, if you'd have bought it when it first came out, yeah, okay.
No, you can't do it over 10 years.
Right.
That's my point. You
Yeah.
can't do it over 10 years.
Correct.
Impossible.
Well, in fact,
Absolutely impossible.
You know, the rule of 72s is whatever interest rate it's
That's right.
growing at, right? It's going to divide that into like 10%. Rule of 72s, 10% rate of
Right.
return. It's going to double your money in 7.2 years, right?
Yeah.
So that means that if it's appreciating 10 years, a $150,000 house is a $300,000 house.
Correct.
In just 7.2 years.
Correct. And you're all in that deal for $30,000.
Yes.
So what's $150,000?
That's a 10x
That's right.
rate of return in 7 years. If you can't get if that didn't get your motor running, I don't
This isn't the radio show for
Yeah,
you.
right, exactly.
But I also will tell folks this is not a get rich quick scheme.
Correct.
Right?
It's a delayed gratification.
That's right. This is 5 years.
Yeah.
This is what most of you party kids did in undergrad.
Right.
Yeah, the science guys, we got science and engineering, we got stuck for 4.5, 5 years. The rest of y'all did it because you were having a really great time.
Yeah.
So in the same time you did your undergrad, you can become financially independent.
Yes.
Tom, is there an age limit on financial independence?
No, I think what you're asking is what's the age of retirement, right? Most
Right.
people, if we ask a crowd of folks, what's the age of retirement? Well, it's 65, 70, 75,
Right.
80 years old is the answer. Or some people go, I would never want to retire, right? It's not about whether or not you want to quit working. It's can you financially afford to quit working, right? So then what's the age of financial freedom? And the age of financial freedom is when you have passive income coming in that exceeds your annual expenses, right? So that when your investments, because, most people live life like there's two buckets. You've got a time bucket that needs to be divided between work and leisure. And and it doesn't matter what the percentage, but analyze your own life. Do I put 80% of my time into work and 20% in my leisure, or do I? And leisure includes family and all the other everything that's not work, right? So
Right.
it's work and then not work, right?
Yes.
So most people work based on this two bucket mentality. But what happens if you start thinking about a third bucket, that you have part of your time going into your third bucket, which is your investment bucket, right? So then that can actually start creating. So it really takes your time back to allow you to put less time in the work bucket and let your money work for you. It's an additional clock. Yeah, I mean that's really what it is. So 5 ways to make money in real estate. You mentioned that the two that we primarily focus on, one is income, the other is appreciation, but the other three are not disappointing.
No, you've got what I love is when someone says, "Oh, you're buying a piece of real estate and you're having to pay that. I don't want to pay that mortgage every month." I hear
Correct.
that all the time. Like, I don't pay the mortgage.
Right.
I don't.
Yeah.
The tenant pays the mortgage.
Right.
It gets the check for rent comes into the account, and then I
Take a
can't-
portion of the check.
I can't remember who's got the last one I did has got a 30-year note on. Maybe it's Chase, and then Chase does an auto draft. Whoop, and the money comes right out. I don't even see it.
No, right. Yeah.
In fact, you can
2
do
minutes.
technically you can do taxes and insurance the same way. But I mean, I'm literally once the house, the challenging part of this business is finding the deal, getting it rehabbed, and putting a tenant in it.
Correct.
Which
will teach you that.
will teach you that. But we have a team that does all that.
We'll do that for you.
Yeah,
Right.
we have a team that does all that for you, right? So you're literally shuffling paper from one side of your desk to the other, and someone's paying off that mortgage.
Sure.
And now here's the crazy thing. Then there's some tax benefits of doing that.
Yeah, and that's one of the best parts. Because sometimes people go, well, what if they take those tax benefits away? And we'll talk about that on the other side of the break. You're listening to Right Path Real Estate Radio. We are a call-in show also. If you want to call in and ask any kind of questions, 713-785-1817. Of course, what we ask is that you keep it real estate related. If you want to know about buy, fix, and flip, you want to know about wholesale, if you want to know about buy and hold, if you want to talk about active versus passive, if you're struggling in any of those areas about how you find deals, how you fund deals, how you analyze deals, if you want to know about any of that, give us a call, 713-785-1817. You know, the number one thing that people need to do in order to change their financial future is to take action. If you want to get a question answered, all you have to do is take action. Pick up the phone and call 713-785-1817.
Mike's off.
Hey, good morning, Brian. Good morning, Mary and Joe. And Juan, Patrick, Sebastian.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly home money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance in Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling.
I thought I was the only one.
Investment properties, whether it's a flip rehab or a rental rehab.
I'm going to have to leave the station.
Standardized process. Over the last 6 years, Fast Track has completed over 17 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done. Train and maintain quality crews so it gets done right.
Yeah, this is going to work.
Complete the work in a proper order so it gets done fast.
Yep.
No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
That's funny.
Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
This is Business 1110.
On that riff, it always cracks me up how long that pause is.
Yeah.
It seems like an eternity. You know,
it's just because we've gotten disconnected from the station
here we
too
go.
much.
Hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. Welcome back to the show. So one of the things that we teach at Right Path Real Estate is how to get, it's practical real estate investing is our tagline. It's how to get on the right path for your financial future. The number one thing that we focus on when people first get engaged with us is how to put a plan together. It's like really stop, slow down. You know, oftentimes, well, in fact, let me back up. How long has it been since you've met somebody and like, hey man, how are things going? And they don't go, oh man, I'm really busy. I've got so much going on. I'm really super busy. You know, it's almost like it's a badge of honor how busy people are with stuff that they're doing. That's almost like showing how successful they are because of how busy they are.
Oh, I guarantee you, the vast majority of people replace results with activity.
Absolutely.
And it's like being busy is not now it's an American thing, right? I typically find that. But
correct.
But when you ask,
although we're exporting it pretty rapidly,
we are exporting pretty rapidly,
right?
Yeah.
And there's no tariffs on that.
No, there's no. That's tariff free.
that is tariff free, right?
Yeah, my flip-flops, my plastic flip-flops from Walmart have gone up 50 cents since the trade war. Anyway, so...
Oh, my gosh. Speaking of that, walked in over 4th of July weekend, walked into a Walmart, picking a few items up, right?
Yeah.
And I'm just looking at this barbecue grill.
Yeah.
And, you know, it's got wheels. It's got this top. It's made out of mostly whatever metal substances it is. It's painted. I'm thinking about what would it cost to manufacture that thing? And then the distribution cost and shipping and all that. And they're selling for $19.99. And I'm like...
$20. I don't.
I mean, like when you reverse engineer to selling that item, it's like, getting the corrugated box, the box printed. I mean, it delivered. How much is Walmart making?
Yeah.
I mean, it's like, what? Yeah.
Go to Europe sometime and see how expensive stuff is.
Yeah.
It's the United States. For you to be unsuccessful in the United States is a joke.
Yeah.
It is so easy to be successful here. You got to work, but you're working anyway.
Yeah.
Just work on the right stuff.
Right.
It's like, this is a joke how easy. I hear this all the time. Tom, you don't understand. We're going to hear tonight, the Redneck Country Club. Jason, you understand how competitive it is. And I'll say, competitive compared to what? What's competition? Like, are you seriously that weak? You can't be successful in one of the most awesome real estate markets in the country? You're that weak? I mean, why are you even here? It blows me away. This is where can you go and buy a grill for $20? I mean, it's like,
yeah, right.
You look at stuff like that. Look, I'm looking at deals right now, and you're like, wait a minute. So I buy the house. I'm out of pocket, meaning I pay, if you will, in cash.
Yeah.
$20,000 for the deal.
Yes.
And it makes me $3,600 a year. Plus, it appreciates 10% a year. And we're going to have an argument on whether or not that's a good deal. I'm like, what were you investing in before? Oh, I was buying Apple.
Yeah.
Right. And you're sitting there drooling, your eyes are drying because you're sitting there having to watch the stock ticker every day. Oh my God, what's going to happen? Oh, I got to retire in 5 years. What am I going to do? What happens if it crashes? And I'm like, and what do I worry about? Nothing.
Right.
I don't care. I just buy another house. I don't care. One of the things I find fascinating, and it all comes down to control.
Oh my gosh, Apple's down $1.40 just today.
Oh no,
that's 1%. It's down 1% today.
Hey, did our real estate fall 1% last night?
No. I don't care.
Yeah, I don't care either. I really could care. I could care less if our real estate fell in half today.
Yeah,
we're just gonna go buy more tomorrow. I don't care.
Yeah,
and it's like people get stressed out.
Because rents aren't going to fall in half.
No, they're not.
No, right.
I was chatting with one of the guys in our group. I won't mention his name, but he's moving. Him and his wife are looking for a house.
Okay.
And he's going to move, and they're going to rent the house out they live in. They've lived there like 10 or 12 years. And they got it when they first got married, had kids, and all that stuff. And I said, well, what's your mortgage? He said, PITI, the whole shooting match, is $700 a month.
Wow.
I'm like, oh my gosh, you bought that way cheap. He goes, no, I was renting here, and then I bought it. And then he said, I thought rents in my neighborhood were about $1,200 a month. Now he's got access to MLS and all. He's like, I just never checked. He said the house, it's almost exactly like ours, catty corner across the street, in worse condition, rented in 3 days for $1,600 a month.
Jeez. Good schools.
Good schools, right?
Good schools.
So he tells the wife, Mama, we just got a raise.
Yeah, right.
So he's going to capture $900 a month in cash flow on one deal.
Yeah, imagine how excited most people would be if their boss walked in and said, "Hey, I'm going to give you a $10,800 a year raise today."
Yeah,
and people are like, "Yes." And oh, by the way, it's I'm going to pay the taxes on that too. It's going to be tax-free money.
That's right.
Yeah.
And oh, by the way, it's your entire salary is going to appreciate 10% a year.
Yeah,
and I'm going to pay the taxes on that. And then there's going to be some mortgage paying out. I don't know how you make that equivalency in our example here, but yeah, I mean, I just don't.
Okay, here's another exciting thing I get excited about in real estate. So, we've got these people up in Washington, the swamp dwellers, right?
They're all part of the swamp. Don't give me this nonsense that Trump's not. They're all part of that nonsense.
But you've got these swamp dwellers up there, right? And would you say that they act in favor of their own best interest or against their best interest?
Oh, they definitely are in favor of it.
They're not. We agree that they're not going to do anything against their best interest,
to
right?
hurt themselves. Yes.
Okay, so most of them have, at least if they don't have a bunch of money when they go in to office, by the time they leave office, almost all of them have pretty good chunk of change.
Well, if you look at just the real estate side, Nancy Pelosi's big real estate person.
Yep.
Obviously, Donald Trump.
Maxine Waters apparently has a pretty nice pad.
Maxine Waters is a real. I mean, you start going down all the real estate stuff they're involved in.
Yeah.
I have this feeling.
Trump has a little bit of real estate.
He's got a little real estate.
Yeah.
You know, it's huge.
Yeah, it's huge.
Look, yours is good, but I'm just saying, you know, it's not the best.
Right,
Mine's the best, right?
It's huge.
So when you look at all those guys, are they going to enact laws?
Even Michael Bloomberg has some real estate.
They've all got it.
I mean, the fact that he owns Bloomberg, right? The terminals that traders use, right? So the fact that he's a billionaire on that, but so he's made his money in that, but he has real estate too.
Mm-hmm.
I mean, I guarantee you, most everyone that's in politics has real estate. So are they going to write laws that are going to be against? I mean, if you look at the advantages that real estate gives you, it's like unbelievable.
I was watching something on I'm not a big Sean Hannity fan. He kind of drives me crazy.
Yeah.
But I caught a clip one day. Somebody sent it to me, or maybe it was a written thing. I can't remember. And he said, I don't trust any of this Wall Street nonsense.
Correct.
I only invest in real estate.
Yes.
And I thought, you know what? He's
a little bit in the know.
He knows people.
Yes,
right? I mean,
correct.
he could call up the biggest traders, the biggest hedge funds. You can't tell me that guy doesn't know. I mean, he knows everybody, right?
Yeah.
And what does he choose to invest in?
Yeah.
Invest in real estate. He does a lot of commercial stuff, but it's like that's a classic. You know, another one. I'd love to know what Rush invests in, but it wouldn't surprise me if it actually invests in iHeartMedia. I know he's got a significant chunk in that.
Yeah.
Wouldn't shock me if he's got a bunch of real estate too.
In fact, that's what you'll find a lot of times. People invest in a business.
Yes.
Not necessarily like through buying the stock or things like that, but they'll buy a chunk of a business. Well, then that business will throw off profits, right? And then what do they do with those profits? They typically go buy real estate, right?
One of my favorites is when someone says, well, you know, Warren Buffett got rich on the stock market. No, he didn't.
Right.
Y'all realize? I want to make sure everyone realizes this. Until recently, Warren Buffett did not invest in the stock market.
Correct.
He bought companies.
Yes.
And what's amazing is he bought them at book value.
Yes.
Which is all of their assets, including what their real estate holdings are.
Correct.
And that means that he was buying them at a profit for their liquidation value. So even if they didn't make money, he was still making money.
Correct.
So there's this whole idea that, oh my gosh, you've got to, invest in all these different kinds of stocks and bonds and pray it all works out. I'm like, no, you don't. You need to invest in a asset that you understand. And what do you understand better than anything? A single family house.
It's not that complicated.
I'll tell you, the house you live in is the investment you know the most about.
But Jason, I live in an apartment. I don't live in a house.
Well, go find a house near where you live and buy it as long as it cash flows. I mean, most of y'all that listen to this radio station, listen to this radio show and watch our Facebook feeds and all that other stuff, probably live in a neighborhood or near a neighborhood that goes to the same school that your kids go to. You know that neighborhood really, really well.
2 minutes.
You're not going to know any other investment better than the house you live in.
Yes.
So find one in your neighborhood that cash flows, buy it, and just keep buying.
Yes.
Buy them and buy them and buy them and buy them and buy them.
Yes.
Because in the long term, I mean, I pray we have another 2008, 2007, another crash. It's not going to happen. That's what's depressing. I'm getting to the point. I'm getting depressed now.
Can't say never.
It's not going to be as bad. It's going to be, houses worth $200,000. Now they're worth $185,000 and everyone's freaking out. I'm like, it'll be a 10 or 15%. It will not be the 50% fire sale that we saw 10 years ago. That's not going to happen again. Well, unless someone starts giving away free money again. I just don't see it happening. So,
never say never.
Yeah, I mean, it would be great. Our net worth would be absolutely absurd at that point. So, however, when people tell me like, oh, I'm really worried about the downturn, I'm like, yeah, I'm worried about the downturn too. I'm worried I'm not going to see my kids for the next 3 years.
Right.
And they said, what do you mean? I said, because I'm literally going to be calling people dawn till dusk, finding money, getting deals, because the world will be on sale. It's going to be we're going to have so much activity, it's going to blow you away, which we still could based off some of this hurricane stuff. But the reality is like there's the way I look at let me put it this way. The way we structure our deals and the way we built our business, there's not a tremendous amount of downside. There's just not.
Right.
one of the things Donald Trump used to say before everybody started hating on the guy, it was, look, if you manage all the downside, then the only other outcomes are break even and make money. And he's right. So if you just manage the downside risk with a good team, with really good education, with a really solid plan, there's not a whole lot of chances of losing.
We're going to talk about one of the few mistakes that you can make and why even that worst mistake is not that big of a deal. On the other side of the break. Stay tuned. Right Path Real Estate Radio. Give us a call, 713-785-1817.
Mike's off.
All right.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area,
Man, Carol
probably
Crest
not a
looks
question
cool.
of if you have movement, but when. Call Foundation
It's a good-looking
Check for a
house.
truly
Yes.
independent, unbiased foundation
Yeah.
evaluation.
Yeah, doing the shutters dark and all that.
I was going to say, just painting the shutters and getting all the stuff out
and
of
the
the
red
yard.
door.
Yeah.
Yeah, just...
We're not in the business of repairing foundations.
Kind of put a little stick in Audra's side, the red door.
No, it's,
The red door.
It pops, doesn't it?
It does. You can't put a green door on this
No,
one.
it can't.
Is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's
Oh, it's already listed?
foundationcheck.com.
Yeah.
You found or reviewed a good investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Yeah, I love that master shower. Dual shower heads. That's clean.
You know the greatest mistake real estate
That's what's at my crib.
not understanding the potential
The seamless ones are so cool.
Yeah.
And I was kind of surprised. It's not hard to keep clean. I thought you'd get a lot of watermarks on it. It's really nice.
Do you keep a squeegee in? No?
Nope.
Okay.
Just clean ladies come by every 2 weeks. It doesn't even like today. I was, they're coming today, and I'm like, it doesn't even have watermarks on it.
to CPAs to estate planners and much
I'll
more.
power wash that.
Download
Yeah.
a free ebook, The Invisible Investor Strategy, today
The roof's getting
at
clean, too.
AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Did you know that there are over 24
Yeah, adding
trillion
this window
dollars
here,
in
I think, made a
retirement
difference,
accounts
too.
in the US?
Yeah, it did.
Imagine if you could use
I think that was a
someone's
big
IRA
win.
Yeah.
to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much
Only
more.
thing I really don't
Many
like
of
is
our
the way it got
clients loan
staged.
money from their
The,
IRAs
the
to
space
fund
from
real estate
here,
deals
Oh,
all
that's a
over
big
the
all
space.
country.
it's like
We don't
500
sell
square
any
feet.
investments or give advice.
It's
However,
just
we do
empty,
hold
and it's
free
like
networking
I've already
events,
talked to Audra about it,
weekly
but
educational classes and free consultations with an IRA specialist. For more information,
That's one I
visit
would have
our
loved to
website
move
at
into. There's only a handful of these that we do that every year I'm like, that would have been a sick house to move into.
To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The
All right,
experts
20
agree
seconds.
Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, gentlemen, hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. Want to talk about the number one mistake that most people are really worried about that's really not that big of a deal. And we've taught about, hey, this is the number one mistake that you can't recover, but it's got to be taken in context.
Mhm.
And the one mistake that you cannot make is paying too much for the asset when you buy it.
That's right.
And that's true if you're wholesaling or if you're flipping, because your time horizon doesn't bail you out. But if you're doing buy and hold, although it's not ideal, it's really not the end of the world.
I've said that when you get to because real estate is an inflation adjusted asset, if you get into a deal that's just not a great deal, in the long run, if you hold on to it and it cash flows, time will bail you out of that deal. Time will eventually bail you out of that deal. When you're flipping a house, you really got less than 12 months, and it's not going to bail you out unless you're in a market like California or Miami or New York, Boston, some of these other markets. Seattle's another one. And you see that in a lot of these markets. When the price stops, a lot of these builders and flippers go out of business because they bought a little bit higher price, praying they'll get bailed out. Now, landlords, on the other hand, once you've got that house rented, I mean, if you paid a little bit more than market price, who cares? I mean, it really doesn't matter at the end of the day. You're cash flowing day one. That property's bringing in money day one. And then it's appreciating too. And it's worth that $150,000 house is worth 10% more at the end of year one. And it's like,
well, in fact, really, the system will not allow you to overpay for this. Not like you can go in and buy $150,000 unless you're paying all cash, right?
Yes.
When we're talking about using leverage, it's nearly impossible to go and pay, too much for the asset, because once you get the appraisal, it's not like you're going to be going in and paying $180,000 for a $150,000 house. It just can't be done.
Right.
But even if you did, even if you made a mistake, you came in from, some other foreign land, you came in from Mars and you're like, I don't know what things are worth here. I just take my money, right?
Yeah,
And you paid too much. Really, if you paid all in cash, and the asset value, let's say you paid $180 for a $150 house, right? And we know it's appreciating at 10% per year. In 2 years, you'd be at break even.
Yep.
And then it would double in just 7 years from the $150. So in 7 years, growing at 10% per year, you'd have a $300,000 asset in 7 years that it's like, okay, you paid $180 for a house worth $300. It's just like that's the worst that you can do.
And it's cash flowing the entire way.
Right, yeah.
So I don't whenever I hear, oh wow, there's all this risk in real estate, I'm like, well, explain to me what the risk is.
Yeah, right.
If you get a good rehab up front,
right,
you fix everything. You do not, my favorite's the guy that's like, well, the water heater's only 10 years old and doesn't need to be replaced. I'm like, oh, you will learn that lesson. Right? It's the same reason why Fast Track replaces quarter stop valves, right?
Yep.
It's like, get all that stuff
Do you
fixed
know how
up
much
front.
those quarter stop valves are? They're like $4. And the labor on them's like $20. It's like it takes 45 minutes to an hour to change one, right? And so they change them for like $25 a piece. And there's one for the toilet.
Yep.
There's one for the for each sink, or two for each sink, hot and cold, right? So if you've got his and hers, in the master, so you've got like 5 in one bathroom, you've got 3 in other bathrooms. You've got like maybe you've got 2 in the kitchen, sometimes 3, because you got hot and cold and maybe whatever. So maybe there's 3 in the kitchen, one for the dishwasher, right?
So what are we talking about here?
$300.
$300. Okay,
Do the whole house.
So let me give you. This is a great risk management discussion.
Yeah.
Water heater.
Yeah.
It's $500 installed.
About $685.
So let's call it $700.
Yeah, right.
And $300. So for $1,000,
Yep.
you mitigate a $25,000 loss sometime in the next 10 years.
Yes.
It's like it's stuff like that where people say,
and it's the phone calls. Like, what are the main things people call about? It's my air conditioner's not cooling. Okay, well you know if it was more than about 8 or 10 years old, you know you probably replace the condenser. That's the part that wears out the quickest. The furnace and the coils typically last 20, 25 years, but replace the condenser. And if the whole thing's 25, just do that on the front end. I mean, these are the kind of things that we can save you the time and money on the front end. By the way, we're teaching a weekend class this weekend. You knew that, right? You're going to be here this weekend?
Yeah, I'll be here this weekend.
I think I'm going to show up right. We're going to be teaching these kind of things. What are the things that you must fix? What are the things that you should fix? What are the things that you could fix? You know, it's really what it breaks down to is the must-dos, should-dos, and could-dos. And all of this is very learnable. And in fact, we can accelerate that learning curve. What took us, you know, a long time of trial and error, things like that. But we actually engaged mentors in the early stages, right? But we figured it out pretty dang quick. That's the good news is, you know, it's not like trying to figure out rocket science or brain surgery where you're talking about a 10 or 12 or 15-year learning curve, right? Where it's just, you're looking at a 15-year of education before you really start doing.
You know what I love? You will go to our weekend retreat.
Yeah.
You will make more money from the $497 2-day event than you will from the 5 years you spent in undergrad.
That's crazy.
And it costs you, some of you guys, $20,000, $30,000. Some of y'all $100,000.
Yeah.
You will make more money coming to our weekend retreat than you will with your college degree.
Yes.
I mean, that's the pain. And I know that sounds crazy. You're like, no, there's no way that can be true. Yeah. We can show you how to flip a house and make $100,000. We do it all the time. In fact, we're looking at one that we just listed today.
Yeah.
So it's like you can make $100,000 a year flipping one house.
Yes.
From our $500 2-day weekend retreat. I mean, I don't know what a better deal is.
Well, in fact, this is a question that we get a lot of times is like, hey, what does it cost to go to that weekend event? And I'm not trying to be a smart aleck. I'm really not. And but I want to like give them a head snap a little bit because they don't even realize that it's the wrong. Because my response always is, you mean if you go or you don't? Right? Because there's a cost for going that's relatively small. It's two days of your life and $497. But what's the cost of not going?
Yeah.
I mean, it's like if you knew that you could make an extra $100,000 or $200,000. I've made a couple of phone calls the last couple of days. People that have signed up, and then a family, you know, mom passed away, or you know, some extremely valid reasons why they couldn't go that particular weekend. But then, what amazes me is that when they push it another weekend, and then another weekend, and then and we're talking about, we only do it one time a month.
Right.
When they push it to, you know, the 3 months down the road, and I'm thinking, man, what has it cost them? I was talking to a guy that signed up for our event, and he's a long-haul truck driver. And he can't be there for this weekend. Yesterday he was leaving Indianapolis to drive to Salt Lake City. Like, driving a truck. I mean, that's what he does. He goes, man, I'm booked for this weekend. And I'm like, man, you know what? Next month is going to look just like this month unless you change your thinking.
Yep.
It's the thought process. He's got a broken thought process that's keeping him where he is. You know, I know he wants something different. He can kind of think, hey, I want next year to be different than this year. But the path he's putting himself on, because he really doesn't have a plan for his future to get to where he wants to get to. So what's happening is he's doing decisions based on it's almost like, hey, you know what? I'm really, really hungry. So I'm really not going to eat healthy today because I'm just don't have enough time to plan that out. So I'm just going to grab a quick burger. And so you do that time after time after time. And what's the long-term consequence of making that decision? Just eat burger after burger.
You look like a burger.
Yeah, you look like a burger. Yeah, you look like a burger.
So tonight, you'll be on the stage of the Red Nut Country Club, and I know you're going to say this. Hey, guys, how many of y'all were here last month? A bunch of people raised their hand. How many of you guys are on the same path last month that you are this month? Like nothing has changed.
Yeah, right.
And you're going to do the same thing over and over and over again. We run into guys that started in real estate the same time we did.
Yeah, right.
5 years ago.
And they're on their 8th deal.
Or their second.
Right, or their second.
Or none.
Right, exactly.
I mean, a lot of these guys like, I started in real estate 5 years ago and I did one deal. And I'm like, we've done 500. What have you been doing with your time?
Yeah.
2 minutes.
Like, oh, well, yeah, I had another weekend thing come up, right? I got another birthday party I got to go to. That's great. Those little weekend things are costing you millions.
Yes.
And if you continue to do that, you're going to get those results. Now, I get it. It can't be hardcore work all the time, but you need to start building a plan where you're buying 4, 5, 10, 15, 20 houses a year. We've got a case study coming up with a family this Thursday night. It's a free event. It's where are we having it? We're having it at the hotel, right?
Yep. Mm-hmm.
So if you go to rightpathrealestate.com, it starts at 6:30. We do an introduction to real estate, and then Tom's going to do an interview with this couple that have essentially built $250,000 in net worth in less than 18 months. And they're making, what is it, like $40,000 a year?
$3,600 a month.
Yeah, it's $3,600 a month in cash flow in 18 months.
$43,000 a year in cash flow, and captured $262,000 in equity.
So that's today. They captured $250,000 in equity today, and every year they're gonna have another $100,000 in equity roll in.
Yeah, so
in appreciation.
Yeah, so they basically what they did in the first year, the $262,000 in equity, the $43,000 in income from cash flow, and $96,000. That's about, doing the math on that, $150 plus about $410,000 of wealth and income created in 1 year.
So just these deals they did, how many did they buy? 9 or 10? They bought 9 rental houses and 1 flip.
So when I was talking about this about 2 weeks ago, their daughter was listening on the radio, and she texted me, and she says, hey, we just bought 30 and 31 this week. So they bought 2 more since this came out.
Here's what's crazy.
Yeah.
They worked hard in the last year for these 11 houses.
Yeah.
If they did nothing else, they will be millionaires in the next 7 years. That's net. They could sell these things, have $1 million in the bank.
Yeah.
This is not that hard, but you got to change.
Yeah. Right Path Real Estate Radio, 713-785-1817. See you on the other side of the break. Hey, good morning, John. Hey, Kenny, thanks a lot. And Joe, good morning.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-911 or check us out online at nextgenappraisals.com.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com. And don't
Interesting
forget to
that it's in
tell
all
us you heard
cash,
about
isn't
us
it?
At Right Path
Yep.
Real Estate.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you.
You know what's amazing to
Call
me
Houston's
is just
leading real estate
how
risk
close
management
those guys are
experts.
to
Benchmark
real
Insurance
success,
Group of
right?
Texas.
They're just missing two things.
281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
This is Business 1110.
All right, fellas, hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. Want to remind you that we're having a case study this Thursday night, July 19th. You can go to rightpathrealestate.com, register for that event. One of the best things about it, it's a free event, but that's not the greatest thing about it. It's that I've always believed that if I can see someone else achieving a certain level of success that was physically possible to do, that if you followed their plan, that why wouldn't you get the same results that they got? And so you're going to get a chance to see a couple that has executed a plan that anybody can execute and get the exact same results. And their results have just been phenomenal. But they're not extraordinary. They're not so unusual like, oh, yeah, I grew up next door to Bill Gates, and so because of that, I bought at the IPO, I just happened to be his secretary and was gifted. I mean, it's not that luck kind of thing, right?
You know what I thought was funny is there's this meme going around on Facebook, and it says you've got four choices. One's like $1 million, and one of them's to work with somebody for 3 years to learn everything.
Yeah,
and
right.
Everyone's like, I'd go work for Jeff Bezos. And I'm like, there are people that have worked with Bezos for 3 years and they ain't millionaires.
No, right.
I'm like, you need to work with the right people to get you to the place you want to go.
Right.
And this is our case study Thursday night's a classic example of this. Two folks that took what we taught and they just executed it. And consistently now, and they're just buying another house and buying another one and buying another one and buying and buying and buying and buying and just keep buying houses. I mean, this is not rocket science. It's not as hard as you think it is. It's just not. So that's Thursday night. RightPathRealEstate.com. Sign up here. What other final thoughts do you have here, Tom?
Well, we also have the weekend event, and again, if you're not there, you're delaying. What I would say is you're delaying your financial better future. However, if you don't have a plan anyway, it's like, what are you delaying? And it's like, you've got to put together. You will, if nothing else, you will come out with the burning desire to put together on paper what you want this next year to look like with a financial plan. What if you could add $400,000 or $500,000 to your net worth 12 months from when you get started? Why would you delay getting started? So go to rightpathrealestate.com. We even have a code there that's good through the end of the day. We've got a promo code. It's right there on the website. You get $300 off of this weekend event. We won't do that again next month. So it's because the code won't work in August. The code is July. So you're listening to Right Path Real Estate Radio. Thanks for listening.